almost 70 years of work, at least 50 anyway, and
Yes.
depending on how you want to punch the numbers. But there's a lot of work on this property, not the least of which drill holes and a lot of sampling from end to end and side to side. And that's of course what this news release was based on the values of the titanium and the vanadium.
Hello, everybody, and welcome to Betweenplays Stock Market Strategies. Today we have with us Dwayne Yaretz of North Atlantic Titanium Corp. How are you doing today, Dwayne?
Great, Albert. Thank you.
All right, cool. I hope you don't mind. I'm wearing the Canadians cap. Look, we're the last Canadian team. All right. So I'm hoping that all of Canada is now coming behind us. I mean, at one point, I was behind Vancouver. I was behind, and like any Canadian team, they were the last ones left. So
Yeah.
I hope it's
No, no,
okay. I mean, I
no.
know you're out of Vancouver, so
Oh no, 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 no. It's all good. Hey, the Canadian team is still in the running. That's what we want to hear.
that's what we want to hear. I completely agree with you.
Yeah.
So, Dwayne, when you were on the show a few weeks ago, what we did is, we sort of like we spoke about the company, we spoke about titanium, its importance on the planet. We spoke a lot about the macro environment like that. I'd like to touch more on the company itself today. You came out with a news release today,
Mhm.
and naturally, we came out with some information in that news release that's very important. And what I find really interesting here is that we are at the very beginning of the story when it comes to North Atlantic Titanium. So let's get into, if you don't mind, we'll do this more in chronological order. The option for the Everett project. All right. And this is where I think that we could get into de-risking and all that kind of stuff
Sure.
because we are so much at the very beginning that when I compare it to other stocks, let's just say, or other mining companies, they have to go out and they have to, buy land, hope to God there's something underneath. I've heard, people say that, hey, you want to kill a good project, drill it,
Mhm.
So the thing is that when you look at all these things and you're looking at this option agreement, why don't you go into it? Have you made any purchases on this? Has it begun this whole agreement? And then let's get into your news release today on um, the work that needs to be completed. Let's start from the beginning.
Sure. Okay, well, thanks. Thanks, Albert. Yeah. So, in fact, we have made our first payment already on the property.
Yeah.
And we've also started spending money, which was also a condition, of course, of the agreement. And we'll work our way towards a 50% ownership here. It has to be done on or before September 30th, 2029. So we've got some time.
Yes.
But let me just say that was really only for the purposes of the agreement with full understanding from both parties. Now, we're not obliged to spend that money and do that work before 2029. But the idea is, as I said to you in our earlier discussion,
Yes.
I plan. Now, I know the best laid plans of mice and men, as they say.
Yes.
However,
Mice and
I
men.
plan on having been on a beach with a margarita in my hand in 18 to 24 months. So we're going to condense, what might otherwise be a 7 to 10-year process
Yeah.
of taking a property and
On a
converting
different
it.
type of project and a different type of mining project. Yeah.
Absolutely. And we
Yeah.
can do that because, as you know, there's already been almost 70 years of work, at least 50 anyway, and
Yes.
just depending on how you want to punch the numbers. But there's a lot of work on this property, not the least of which drill holes and a lot of sampling from end to end and side to side. And that's of course what this news release was based on the values of the titanium and vanadium. So we can
Yeah.
we can get more into that. But
Yeah.
yes, we made those payments already, and we can earn up to 90% of the property over time.
Wow.
And so
That's
this is,
amazing. So,
yeah,
so
given the
what,
scale, yes.
and basically the timeline isn't like basically 2030 or something like that. And that's with the PEA. So you're really looking at condensing this as much as humanly possible.
That's right. By September 30th, 2030, where the idea is that we would have a PEA. But again, condense this to the point where we can get to that PEA very, very quickly. And I think it's on that PEA really, when you think about it, where, whether it be governments and or, the large mining companies, maybe our neighbor, maybe not, but somebody or all of the above, I think are going to come forward, because remember, a PEA is not a mineral resource estimate. I don't even know that we'll get that far, because I don't think we necessarily need to. A lot of the preliminary work has already been done. We know by virtue of the holes that have already been doing it, we've already done, and we're going to be doing more conformational holes here. That's part of the next program that'll
Yeah.
come up in this spring and into July when we start the actual drills on the property.
Yeah.
But that PEA confirms, your obviously PEA by definition is a preliminary economic assessment, and that
Absolutely.
looks at your costs, your production, your potential value of your resource, and then your estimated mining costs and what your expected cash flow even would be. But again, remember, this is before a mineral resource estimate. But
Yes.
again, I think it'll be at that point where governments and or other companies are going to say, look at this, NATO, North Atlantic Titanium, has taken out a huge degree of risk, and we're there. And that's why, Albert, going back to what we talked about in our last discussion, that we're doing this metallurgy, at the same time as our other exploration work and drilling. Why?
Yes.
Because as we do the drilling, the future drilling come July, every hole that we punch in, or every group of holes, will add to a resource calculation. We'll
Absolutely.
know a depth. So we already know these other things I've just mentioned, the cost, the actual metallurgical results, how
Yes.
much vanadium you have, how much titanium you have, how much phosphor you have,
Yeah.
what the value of said might be, what kind of processing you might have to use, what's the cost of said processing.
Absolutely.
All of those things, once you have all that, now it's no longer a question of, okay, well, you got to pick a number, 100 million tons or a billion tons. That's what
Yes.
I hope that we're going to be able to prove up, but that's
Oh,
yet to
well,
be
no kidding, because
close, right? Yeah,
the stock will be parabolic, especially with the amount of shares that there is. So the stock,
absolutely.
yeah,
But regardless of all that, like I
yes, of course,
said to you, I think I might have even said in our last interview, if you prove up X amount of tonnage at, pick a number, it doesn't matter. I'm just going to use a number for the purpose of this example. That's
yes,
worth $10 a ton,
yes.
but it costs you $11 a ton to get out of the ground. That billion tons is worthless, isn't it?
Well, yeah, because the metallurgy plays a huge factor in this, right? I mean,
Right.
yeah, absolutely, and what we've seen from NATO is that, well, I mean, you had the U.S. Geological Survey that says that there's 234 million tons,
Correct.
which now we're working to establish all of these numbers in the present, and at the same time, I mean, it was like a 97.7 recovery rate, almost 98%. And now you're defining that as well. You're trying to this is what we're trying to get out right now in the releases, or the 43-101 that you're going to get out, which is when exactly the 43?
I
I can't remember again. It's how long?
Yeah, well, we should have phase two metallurgy come out here within the next week or
Okay.
thereabouts. Again,
Okay.
these things are out of my control to some degree. They're,
Yeah.
they're relegated obviously by engineering firms and labs, so
Yes.
dependent on them. But nevertheless, I'm going to say
Yeah.
within the next week or so.
Oh,
And
that's
the
not bad.
43-101, we would expect that we would have that, I would say, on or before month's end.
Oh, that's really, really good. So, because we're trying to establish here today, the story that I'm interested in knowing, and I'm sure that other people are interested in knowing. So, the process of what you're doing, I like to try to compare it to others that are out there and to try to gauge a little bit. So, basically, there's been a lot of work done when we look at other companies that are buying up land. They're
Mhm.
buying up land. They see something maybe on an outcrop, or it's just a good area because it's next to something. I would say that this is less risky at this point when we look at de-risking projects. We look at risk because that's what a lot of people do, right? I mean, that's what you're supposed to do when you're investing, right?
Right,
Is you
right.
look at the risk. I would believe that there's less risk right now in this than there would be on someone just purchasing some land because it's next to something.
Sure, sure. Well, I would agree. And as we discussed uh, before, and again, just recently, there's sort of three major components to de-risking. One is the acquisition of the property itself, and that you're in a good area, and that you obviously have some good mineralization. That we've already proven by both historical drilling and the more recent metallurgy. Then, okay, as I said to you just a moment ago, if you have 100 million tons or 1 billion tons, but it's worth $10 a ton, it would cost you 11, it's worth nothing. Well, so you need to know the metallurgy, because how many projects have you known where they drilled, got great results,
Yeah.
and then 5 years, 7 years, 10 years later, they've identified this resource in the ground. Now they start doing metallurgy, which might take a year or two or three, at another great expense, only to find out all that expensive drilling is worthless because they can't process for what that metal is now worth today in today's, right?
Yeah,
So
or the
now done
binding
this.
agents, the deleterious stuff that's sticking to it, and they can't use it, or whatever. It just costs too
Exactly.
much. Okay, yeah,
Exactly.
yeah,
So now we know that. So now we know we have very good grades of titanium. Obviously, we're predominantly a titanium company,
yeah.
but it just so happens that we also have a lot of vanadium, 0.9% vanadium. Now, I'd have to go back and actually just take a closer look, but an operating standalone vanadium mine might be 1.3, 1.4% of vanadium. We're at 0.9, and that's a byproduct of our titanium.
That's a byproduct.
And the beauty of it is both the vanadium and the titanium are hosted in the ilmenite, which means it's easy processing. As you mentioned, these deleterious elements, otherwise, almost pollutants, for lack of a better word, because
Yeah,
deleterious, is kind of a multiple syllable word. So
yeah, it is, isn't it? Took me a while
so
to get that
keep
one
it
right.
simple. Yeah. But anyway, again, as I said earlier,
Hippopotamus.
right, magnesium, manganese, aluminum, chromium, all very, very low. In the case of chromium, not measurable. This is spectacular. And if
You
you
got
compare that
phosphorus in
to
there too.
other mines around the world,
Yeah,
well, no, those are the ones we don't want, right?
yeah,
Those, right? And then in addition to the vanadium and the good metals, in addition to the vanadium, the titanium, we also have phosphorus.
yeah.
So then you have to talk about other things, like, for example, the grain size. In other words, how much grinding is required.
Okay.
Because the grain size is rather large, we don't actually require much grinding, which is incredibly important. Why? Because even other nearby resources require much more grinding, which, guess what, is more process, which is more cost, right? No,
Yeah,
it just goes without
absolutely.
saying.
That's the way it
And then the
goes.
third one being,
Yeah.
okay, if once you're developing the mine, when you talk about de-risking, is your proximity to infrastructure.
Oh, 100%.
And right. And for obvious reasons, a lot of mines around the world, not just Canada, are in remote areas. It kind of
Yes.
goes without saying, you don't build a mine next to a city, right? But in
Well,
our case,
yeah,
we're right next door to the largest single titanium mine in the world,
yeah,
with not tens of millions or even hundreds of millions of infrastructure, but billions of dollars of infrastructure that's been built out over the course of the last 50 years,
yeah,
right there. It's
yeah. The
free.
Rio Tinto's what is that? The TO operation.
Lactio. Yeah,
Lactio.
that's right.
Exactly.
Yeah.
So for the infrastructure. So basically, so when people are looking at the company, and you have a very great investors presentation on your deck, is so clear. I invite people to go look at that. Um, what I like also is that when we go back to today's news release,
Mhm.
so that way we were back to, let's focus on the fact that we've got all of this stuff that we could say is to the stage of de-risking already, compared to what if someone's just buying land, right? Because we don't
Mhm.
know what's underneath it. So
Right.
this is really good already to begin with. Now let's focus on, let's say today you have this news release out. This news release is talking about the work that has to be done, because there's some stuff about work that needs to be done in there, and also the amount of
Yes.
money that needs to be brought by September. So for now, how are we looking at funding this program from now to then? Are we, and basically, naturally, one of my other questions to you, well, we'll just throw it in here.
Okay, sure.
Why not? Why not? We'll just 2-for-1 package.
Don't confuse
Um,
my three brain cells too much here, Albert.
two
But
for one package, 2-for-1 package. So naturally, shareholders always worry about dilution. So
yeah,
it sort of the question sort of goes together, right? So how are
sure.
you funding the project? And investors always worry about dilution. So what can we say on that?
Well, right now we're pretty tightly held. I mean, if you look at some of our uh, comparable companies out there. Well, comparable. How can I shouldn't even say comparable because I think our project is stupendous to say the least. But
Yeah.
we're only at 69 million shares, and the idea between now and then is because of what I've already just told you, we think we can add value very, very, very quickly.
Yes.
Again, I don't know that the market's necessarily appreciating the value of that metallurgy, but the government certainly does. I mean, we've already achieved, and this is part of the answer to your question.
Okay.
We've already received a $320,000 grant. That's what helped to fund that $400,000 survey. And of course, that's non-dilutive money.
Okay.
So
Yeah.
you talk about dilution.
Yes.
Non-dilutive money is beautiful for obvious
Absolutely.
reasons, right?
Yes. Of course.
And I don't want to predict that we're going to be getting more, but what I will more non-dilutive grants.
Yeah.
However, what I will say is that first grant was critical, no pun intended. Why? Because you've now taken an exploration play, early stage,
Yes.
albeit 7 years worth of work, but as a private company, so not a public document. So now you've taken that, you the government recognized that there's a real possibility of something great here.
There you
And
go.
as I said, the U.S. Geological Society measures 324,000 tons. The Quebec equivalent,
Thousand, no, million tons, right?
millions. Sorry.
Yeah.
Thank you.
234 million tons. Yeah. Okay. Yeah.
Correct. Yeah.
Yeah.
So now we've sort of, by way of this last metallurgical survey, we've sort of bumped up the caliber, if you will, of our
Yes.
potential, right? And so there's going to be other labs and other governments, both provincial and federal, and maybe even internationally, that are going to be involved or interested, and governments as well, right? So I think there might, and I can't say there will be because I don't know that. I'm not
Well,
obviously.
we're in the very early stages. I mean, like honestly, like of course, how can we? I mean, but already, you're not just buying moose pastures.
Well, that's just it. That's my point. By way of having spent that money that and getting that grant, we
Yeah.
know that there's something quite real there. Now it's our job to take it all the way to a PEA and maybe beyond.
Yeah.
So there'll be that. That's non-dilutive money. So then
Yeah.
we'll do that by again proving that metallurgy and that value. The 43-101 will be yet another third party independent report. And by the way,
Yes.
to your point, because we will have to do other financing. Julian Davey is our consulting geologist who is a qualified person who is capable of doing the 43-101, but
Yeah.
he will be co-authoring that with Micon International, which we announced about a month or 6 weeks ago.
Yes.
The
Correct.
reason why that's important is Micon International is recognized around the world as being a top engineering firm that produces 43-101s. And by the way, they also do mine production and processing design and even mine construction. So they could, not to say we're going there, but
Yeah.
they can take us all the way through. So when it comes time for the PEA, if we were to ever get to a mineral resource estimate, I mean, they're quite capable of doing that. But most importantly, to answer your question right now, is they are internationally recognized. So when we get to these next levels of funding and next more drilling, metallurgy, more drilling, and all these things walking up the de-risking path,
Yes.
the Micon International document, the 43-101, is a document I can walk into a boardroom in London or New York or Toronto or pick a place. I mean, anyone in this business will know who a Micon International is. So that was part of the thinking.
It's
And
important.
I was thinking of de-risking
Yes.
the project so that we have a name like that is internationally recognized. I think that's going to have value in and of itself.
Yeah.
And then, of course, from the fundraising side, we've engaged our research capital as our investment bank, and they're the number 2 largest firm in Canada. They now will be engaging here as we prove up the metallurgy, as we've proven up the metallurgy,
Yeah.
or proving
Yeah.
current tense.
Yeah. The current
metallurgy.
tense of it. Yeah.
They'll bring in their institutional group as well. And so we hope to get that. And then, as I say, we've already got some lab involvement, money's there, but I think there'll be more, because remember, critical minerals are obviously exactly that. They're critical.
Yeah.
And then, of course, there is a net smelter royalty of 3.5%, of which we can buy the first 0.5% for 500,000, and
Okay.
the remaining 2.5% or 1% for 2.5 million. Excuse me. So we can bring that way down, and that will make it again a much more attractive. But we've done that. We've structured that in that fashion so that the early stages, in other words, today, are not owners for the public company. Because remember, we just started with this. And the last thing you want to do is burden the public company with a bunch of overhead, whether it be payments or commitments. That's why we stretched out the commitments until 2030, even though we plan on hitting them much, much faster than that. But we've done that so that we've got lots of runway to achieve all those things.
No, that's really great. Honestly, I'm looking forward to your next news release. I'm looking forward to the 43-101 and having you on the show again, because definitely I believe that people are going to want to be following this story right through the end. And I really want to be on that beach with also a margarita in 2 years. Condense it.
All right. Well, we'll order at least 2.
Thanks, Dwayne.
Thank you.
Have a great day, and we'll see you on the next show when your next news comes out.
Look forward to it.
But you know what? Listen, if anytime you want to come on and talk about titanium or anything, we want to have you on the show. Thanks,
right.
Dwayne.
Well, hopefully we'll have more news again soon. Thank you, Albert.
Thank you. Bye.
Between Plays. It's the journey and what you do between where you are and where you want to be. Research, prepare, plan, and execute your strategy. Do your DD and stay strong in visualizing and achieving your goals. Our strategy is unique since 2020. An original concept imitated, never duplicated. Real conversations with media influencers, educational and expert speakers, analysts and consultants. Between Plays, bridging the gap between companies and investors.